How's the weather, everybody? Hi, Warriors. California getting ready for the next chapter after wildfires to atmospheric rivers, which will cause flooding, mudslides. You'll see it on the news coming up this weekend. Okay, can we make money on that? Is that what you heard yourself thinking? How you doing, AJ,
For
Brand,
real?
James?
Are you guys expecting a bunch of rain?
Yeah, atmospheric rivers,
Oh shit.
which is a term, I never heard of when I was a kid.
You're
The,
right.
you know, who that's a new one, isn't it?
Yeah, I mean, can you fish in them?
I don't know. You could jump on your raft, maybe.
Oh
Okay, so
man.
great weather in Florida. You're through um, hurricane season. Okay, rainy, cold, Urtic, Soleil, welcome to Face. Oh, you're coming here? All right. Well, bring your inner tube, Chad. All right, let's go to work. Hey, Ryan's here too. Okay, so kind of confusing action. This is, how I would term currency action here, like no follow through on much. So, and we have Luke Roman here today, guys. So stick around, see if Luke's views have changed at all with the new administration. So, um, start with Ryan. So I had the trend break. We're above it. What do you think, Ryan? Is it a
Yeah.
short or we buy dips?
Oh, good question. Good question. I think there's enough if you want to scout both sides. I mean, we couldn't even get up to that 104.50 level that's been so sticky out of late. And we've had a move up, and it's already
Fading.
fading. So
Yeah.
it's
Yeah.
it's a market that doesn't know what it really wants to do. It's not going to push, the edges that often. It doesn't want to go anywhere, specific, and it's been the same for a lot of these dollar pairs. You've got euro sterling there. That's back in snooze mode. It's
Yeah.
holding above 83s, but does it look like it wants to go all the way back up to 84.60 again? It doesn't look like it wants to go down to 82 again either. So
Yeah.
we're stuck in the middle. When you look at pairs like Aussie dollar, you got to worry because it just can't get off the mat. It just can't get off the floor.
Would you buy it like is 62 an attractive zone to maybe try longs?
Yeah, I mean, you could do. I'll be worried if we collapse a bit here through the recent lows that maybe we get down there. Ideally, I'd like, if I'm going to go, I'd like to test right at the range edges. So maybe down towards that 61 level, 60, 80, that sort of area.
Okay.
But you've got to think if it's gonna find support, it'll probably find support just above 61 somewhere.
Yeah.
That would be the good signal because that's what we've seen in euro, dollar, and cable. They after making trend lows, they then
Yeah.
started making higher lows.
Yeah. We have
But
two
Aussie dollar,
higher lows
yeah,
yeah. Right.
after that 121. But Aussie
Right.
dollar, it made that trend, that fresh low the other week, and so it's it
Yeah.
doesn't suggest it's quite ready to bottom yet.
Okay. Um, Careful with gold, everybody. Okay. And silver, you know, this could be a failing rally after, this reversal bar. So be careful with that. Dollar index, pretty indecisive, but we have this range. Under 107 could be decisive. I don't think we should get above 108 and a half. So why don't we get back to the blowout number in yields, and they're relenting a little bit here. Um, what do you think? They're going to negate everything that the CPI gave us, or there's going to be continuation to the upside after maybe a pullback to four and
Um,
a half or so?
well, we've
Whoops.
got PPI today, and Powell's sort of made it. He sort of brushed off inflation, that inflation number yesterday,
Did he?
and he's
Okay.
sort of put PPI front and center because he said PPI is going to be a good watch because that feeds into PCE, which is our preferred method of inflation. So, yeah, wouldn't it be just a thing that we see a hot CPI and then PPI comes in softer and we go all the way back down again? But I think if we get a hot PPI number, same as CPI, then we're going to see those yields probably staying above that 460 mark. And but then how long it lasts, anyone's guess.
So a wild action and also in yen just blew through this breakdown, and now we're back beneath it. So they took out the shorts. What do you think in here?
Yeah. Well, yesterday I was a little bit short going into CPI. Today I'm a little bit long off this level going into it. Hence why it probably be a soft number and I'll get stopped again. But yeah, this is one of those, again, another pair where you think, well, what do I want to do in this one? And I'm just scalping around the line. But it's a bit directionless. We've had a dip, we've had a rally can't hold, and then we're back in the middle.
Okay, so on the 4 hour, you could see the overnight action, but a lot of people are looking at the daily. There was a pretty big gap we left in TLT yesterday here. So, are we going to just try and fill the gap here? It's up about 50. This looks like a market in trouble to me. What do you think?
Yeah, how do gaps work in this way? Because there's gaps all over. These are just opening, closing gaps, really, aren't they? Between when the cash market opens, isn't it?
Yeah.
In these ETFs, yeah.
Yeah.
So I'm not gaps in those sorts of markets are a bit different to if you suddenly see euro dollar gap in 100.
Yeah, it didn't used to be like this.
No.
We used to have full candles, and it speaks to the lack of liquidity in the most supposedly liquid market in the world besides currencies.
And the volatility we've seen. I mean, you look at bond yields, how they've moved over the last, 4, 5, 6 years. It's been bonkers, and they're supposed to be the grandfather of the markets.
Yeah, I mean, if you want to be bearish, couldn't you call this whole frame here a big head and shoulders top? If it wasn't mid-range, if you were just looking at this with an 85 neckline, that would measure to what, 85, 94, 71.
Yeah, that'd be a big old move.
That would upset everything, wouldn't it?
Let's do it.
Oh yeah, let's see it. Let's see it happen. So
let's tip some apple carts over.
S&Ps have been a beach ball. Every time they hit it, they bring it back. It's pretty clear here. Your first sign is S&P's back under 6, this little double bottom here, and then back down if we get through here, 59.20, and then if we got through there, and if we got above this blue line here, shorts have to get out of the way. So, right or wrong, it's a pretty tight risk trade to top pick.
Yeah, I'm not a big stats man, but I did notice something. If you look at the wider trend, if you look at a daily or something, since the 4800 break, this is getting on to be one of the longest periods of not making a fresh high after a hold. I think the first one was 47 days. I'll probably have to show it, but if you go into daily, probably.
Okay.
So if you take from 4800, so see where your one is.
Yeah.
If you draw that high across to when we broke, I think that was something like 47 days, and then the second one was 65 days or something, and then we're up here, and we haven't broke new highs for going on 67 days now. So it's the time's ticking. If you don't get that move up over a longer period of time, then you're probably going to see the steeper pullback then.
Yeah, because look, I've interviewed guys that have been talking about a melt up, and we're going to melt up into October and reach objectives, and it was going to be maybe the end of the year, and now we're in mid-February, and this looks the opposite of melt up. It looks frozen.
Yeah.
So anyway, we'll see if we could take out those technical levels. Be careful. So that's what's going on there. And Blake, I know you're still under the weather. You have some things to say before the number today?
Good morning, guys.
Good morning.
I'm okay. I just, I'm just trying to recover. Yeah, I mean, the CPI just didn't produce the move that we thought we were going to get yesterday, and I think that's a little troublesome. If you were trading the dollar, I mean, you were probably turned on your head yesterday, and I do want to just pay attention, really close attention to this dollar Canadian. It is really very, very weak.
Yeah,
And
you want to be short. I think you're talking 42. If we could, wasn't that your level under
yeah, well,
42?
42.60, we probed it yesterday, and I think that, all you have to do is, give us some weak data today, and we might actually take it out, I think it is the risk right now, and I'm not short. I am short some dollar yen from yesterday, as but that's pretty much my only open position right now. But I do want to lay into some dollar Canadian, especially if we open it to the downside. And Ryan, I know you've been kind of thinking that I was thinking it could happen overnight. Like, it's one of those things, and I'll take over the screen here.
Okay, buddy.
Yeah, I was thinking it might happen overnight, but I don't want to just kind of take out a flyer when I can't watch it. But I was thinking that in European trade, we might have taken out that support, but we're getting real close, aren't we?
Yeah, it's the bounces are looking very, very weak, but that support is still looking very, very strong.
Yeah, sure.
It's quite amazing. It's not often you see the loonie this tight, especially considering the rally that it had from 135s, 134s.
Yeah.
Take out the headline spikes and tariff stuff aside. It's been a strong trend that's running into trouble, but I don't know who keeps buying it off of that level, but it's been immensely strong. I'd be worried if we get a break over the data in case it didn't hold. A bit of a stock trip and then we bounce back above.
Yeah.
But yeah, and we've still got the tariff hanging over. So if Trump comes out with something big today, we could be trading up at 144.5, 145 again.
Yeah. Yesterday when the news came out at the end of the show, the F.A.C.E show yesterday, as you guys heard, I shorted some dollar CAD at 143.30 or something like that. And my cost average for the day was at 143.10, and I ended up closing it out last night around 142.70. And I still want to just kind of target it to the short side, but you're right. This is one of those things. If you get a push below that support and it can't hold, then you got to be a little careful. I know you and K-Man, and good morning, K-Man. I know you guys were talking about the Aussie and the Kiwi, and I don't know what's caused this weakness that we've seen, or the dollar bounce back. Maybe is it the anticipation of these reciprocal tariffs that should be news a little bit later today? Is that the reason why we've seen some weakness here?
Yeah, partially because Navarro said that Australia is flooding the market with aluminum and things. So we don't know yet what Trump is going to tell us later on today. He should be signing some reciprocal tariffs. So I think for me, we're holding from the spike low. We came back. We're holding. But to me, we really need to break that 63 figure 10 and 3.25 if possible to really push higher. And for the rest, it's trading miserable to either side, by the way. But Kiwi is probably looking even a little weaker, but that's not looking good either. So yeah, I think, and again, the numbers today, PPI, okay. Yesterday we had CPI, then Powell was talking, then Trump. Now today we have PPI, then Trump later on today. I really have a bit of trouble to find a clear direction in anything if it's not crosses, you know. The one I'm thinking about and looking at the metals then is that if Trump would go really hard, 3K will stare us right in the face in gold, I think.
Yeah, I mean, this is not pulling back
Because
at all.
if it goes a bit hard later on today, this thing is going. And I've um, I've taken that gold chart to a bit of a lower time frame this morning on Face and showing people that if you look at what happened during well, your evenings, our nights here, Asians have been buying it lately again. So they seem to be again interested. So that's why all those drops don't last right now, I reckon. But yeah, I mean the tariffs later on could decide upon the next 50, $60 in gold, but it comes roaring back all the time. Silver is actually a different animal. If it goes soft on tariffs, I think silver could run faster than gold.
All right. Thanks, K-Man. And Dale, you might like this idea, and this is what I'm kind of hoping for. This false breakdown in the Aussie, I want to play into it, and I think you were mentioning a little bit earlier. This is what I'd love to do, is if we could just get I'll go over to the daily chart. If we
like
can
a
get
61.8 pullback to go for it.
yeah, something that looks like this, right?
Oh, okay, a shoulder.
Yeah, like let's get a move back down to like 61.50 or so, because we had to keep in mind this is a big false breakdown of this major support here, and that's what it was. So I'd love to get a long off somewhere down around the 61.50. John says,
I think I'll
Aussie's
scale
like a
it.
beach ball. See copper and China stocks. Yeah, I mean, China's been moving. It's like the AI darling. We were just having a conversation with I was having a conversation with Chris Weston of Pepperstone on the trade-off show last night, and these moves that you've seen in the Chinese markets have been out of control.
Every market but ours. I mean, look at the DAX. That's not an emerging market. That's a developed market, and it's been skying. I think it looks toppy, but oh wow, it did that today too. It's still going.
Yeah,
so
I mean,
there's a melt up. There's a melt up.
It's not happening. The melt up.
We're not. The melt up certainly hasn't happened here yet.
Yeah, look at the IBEX. Look at even the CAC 40 is. Look at France. I mean, even France is moving. It's crazy when that happens, and even the FTSE.
I see
Ryan,
London. I see France.
Yeah,
you know that one. Right?
Yes, I remember that song from kindergarten, I believe.
I just had a flashback. That's all.
You might have. All right, so a couple things that I'll point out for today, and let's figure out what you guys are thinking. So the euro, I'm not sure again why the euro has come off a little bit. I woke up a little late today, so I've been trying to recover. But we can clearly see this really key level of resistance here, and it's right at the 618 horizontal resistance, and that needs to be taken out. I mean, we get above 104.40, and I think that euro goes on a little bit of a move towards the 105.50 level, but it is stalling here. Ryan, do you fancy playing dollar longs or dollar shorts at this point?
As I said today, I'm already long a bit of dollar yen off that 70-80 level we've been turning around. I was short over CPI yesterday and got blown up. I'm long today, so no doubt PPI will come in soft and I'll get blown up on that as well. But yeah, I'm just playing the level here. Seems the only thing that seems to want to do anything.
Got it. And I just so you guys can see, this is where I was like you, Ryan. I stood in front of the yen train as it was moving higher, as it blasted through here. I got stopped myself out rather. But I did turn around and get short it yesterday up here because this is a confluence of You can see the 50% retracement. Also, this move, it's the 78% retracement. So nice confluence of resistance and channel resistance. So that's kind of why I've been short since yesterday. But I am sorry, I happen to be on the other side of the trade from you at this point. So
No worries. You can get some back on when it goes up.
well, K-Man, how do you want to play today's data? And remember, we do have retail sales tomorrow too, which is also could be a mover here in the
Yeah,
US.
I think the retails may be a bigger mover than today's data, but because we have Trump so quickly afterwards, so I still think in short-term terms in whatever I trade right now if with the dollar. Yeah, dollar yen is a tough one. I've put up, but in the flow room, I've put up the proverb of the day. And that reads like long or short at the same price in yen, you can get stopped twice. So that's how I feel about the yen right now. Anything I do is extremely short term. Um, so yeah, I'm actually back short euro sterling because if Trump goes, I still think he goes harder against Europe than the UK. And it's a relatively simple trade if you look at it in the short term. Anything back above 83, 55, 60, it's probably going to run a little bit. But if we stay below, I think we can finally go and have perhaps a look at 82, 80. It's not something where I look for several percentage moves right now. But the other one is, and that's going to be for later, gold. I really think that if Trump goes hard on tariffs, this is got 3K written all over it, you know.
You
All
know what
right.
else? You know what else has disappeared besides all these departments that are being closed? And I hear it in all of our voices for days now. What has also been taken down is being able to have conviction. Remember when
Yeah.
you used to be able to have conviction? So, I mean, since it's been tougher to have conviction,
Mm-hmm.
Yeah.
and your trades, like when I got lucky on Nvidia with Deep Six and whatever it's called, that was 2 days. So,
Exactly.
sometimes nothing happens for 4 weeks and then something happens in 2 days.
Mm-hmm.
Yeah,
So
you know
go
what,
ahead.
Dale, since you were talking about, equities, and yesterday I brought this up on the trade-off show last night, is Microsoft. Microsoft is sitting really on a ledge here.
Yeah, should
And
bounce.
you talk about like the generals, right? And
Yeah,
you look at that support right here, and
yeah,
we are trading below
yeah.
yesterday's lows, which is it's weak. It's weak. What happens if they start taking down some of these big ones? Maybe your
Yeah.
generals get taken out. They start getting shot, Dale.
Yeah. The troops and the troops will have to hold the fort together.
Hey,
Anyway,
oh yeah, yeah. Hey, real quick, I was just thinking about
Hey
this. Just
Blake,
hey,
where's the
hey,
trend
Steve.
line passing from?
That one
Because
comes
I
from right December of
uh,
2023.
okay, because I have the trend line that a support that starts from April of 2024, and we've already broken down according to that one.
Oh
okay.
yeah, of this level here.
No, no, no. Before that,
Oh, okay, right here.
yes. And if you
Oh,
notice, it passes nicely from.
Yeah.
yeah, I see what you're talking about. And it's been such a bellwether for so long. So I mean, when
Well,
you
it,
start
it
taking out these
hasn't been. It hasn't. It made a new high since July of 24. That's a long
Well,
time.
I'm sorry, Dale. What I meant was it's been
Yeah.
such a bellwether for this major move up, and then
Yeah.
yes, you're right. It stalled like all of this last year. So
Like the semis.
yeah, yeah. So yeah, it does. It looks vulnerable. That's for sure. Hey, I did want to mention this, guys, just really quick. For those of you, because we should mention it here. because we don't talk about it all the time. We have a special on the trader funding program, and I believe the 30% off special is you can talk to support, but I believe it expires tomorrow on Valentine's Day. It was a Super Bowl special. If you guys didn't see the email, I just wanted to mention that because it will be gone here in a little bit. So if you guys wanted to save some money on the assessments for the trader funding program, we haven't mentioned it here on the show all week, and I've been meaning to. So I just wanted to let you all know that. Hey, Steve, since we heard your voice, what are you looking at today, and what's got your attention at this point?
We began the day with an attempt to break higher in the euro, which so far we've reversed. So it was looking like the euro and the pound would break out against the dollar, but so far we've taken that back. I have a different channel than you do. Clearly, because my channel passes from that high that you have as a head and shoulders and then continues to that high and dates back to September of 2024.
Okay. Gotcha. But it looked like it was going to take off and it didn't. So we're coming back down towards support. What would you do with it here?
Nothing, because we haven't broken down yet. So from a risk reward perspective, somebody can still try to be short, but we're getting very, very close to a breakout concurrently in the euro and the pound. But believe it or not, my focus today is on a more exotic type of market. Platinum is breaking out from a very long-term symmetrical triangle that dates back to February of 2021. And that is going to be a really big move for the metal after a very, very, very long period of underperformance.
Right.
I think there was some. I'm sorry.
Go ahead, Dale.
February 2021, Blake.
Some new catalytic converter news about using platinum, right?
Yes, among other things, yes. Mm-hmm. But don't forget that that platinum has, over the last several years, has become extremely more undervalued than gold, right? As a reminder, for example, if we go back to, let's say, 2008, the ratio was at 0.42, right? So platinum was a lot more expensive, and we recently got the ratio to almost hit 3. So gold becoming almost 3 times the value of platinum. So that's I'm looking at some point for this trend to reverse and platinum to overperform, to at least mean revert somewhat.
Gotcha.
What if platinum just doesn't go down as hard as gold? That would also narrow the spread.
Yeah, of course. There are several ways to overperform. Yeah. That is one of them.
Okay.
Okay.
But for the time being, to be honest, Dale, it's not that we've had some kind of a massive reversal in gold to worry about it. In fact, if gold closes exactly where we are at the moment, it will register a new closing all-time high against the dollar. So it's not that things look bleak for gold.
No, they always look great when it's going.
No,
like
they don't always look great, but gold has been looking great for quite some time now.
Bottoms look ugly and tops look great.
I agree with you, but gold has been on a
tear,
non-stop move higher from November of 2022, right?
Yeah.
All right, guys, we're about 30 seconds from data. Just FYI, we have jobless claims, but producer prices are coming out. I have the dollar index to the left here, 10-year note yields right here in the middle, and then we have the S&P 500. Excuse me, to the right. So data's upcoming, and
PPI is going to be very important in my opinion. More important than jobless claims, probably.
Yeah, we'll see. And especially if it comes in weak. If it comes in weak, well, we'll see. Here we go.
Hot.
Hot.
Hot again.
Yep.
Oh, yeah.
Hot.
0.3%. Yeah.
Year on year, 3.6. The core and 3.5, the normal one. Initial jobless claims practically as expected, so that's a non-event. So yeah, it's all about the PPI.
Yeah, and once again, you see the dollar initial response is a little stronger, but you would think it'd be better. Just as it hasn't produced much of a move just yet. So anyway, well, Coach, I am excited to listen to Luke Groman. I know you have Luke here as our guest today. So Steve Stelios or Steve, Ryan, K-Man, appreciate you guys being here as always. And Dale, we'll pass it over to you. And remember, guys, check out the Trader Funding Program because the 30% off discount disappears, I believe, tomorrow for Valentine's Day. And if you've not bought your wife or loved one a Valentine's
Flowers?
Day card and flowers,
Yeah.
get it done today. All right.
Yeah. Or sleep in the doghouse.
Yes. Yes. Exactly.
Right. So
Yes.
I don't know. I don't like the doghouse. So there's no heat in there. Anyway, there's my trading warrior brother, Luke Groman. Luke, Happy New Year. I know it's February, but I could say it to you. I hope this is a great year for you and your subscribers. And, I'm so glad I discovered you. I'm like Colonel Parker and you're Elvis.
You're too kind. Thank you very much. And Happy New Year to you too. I appreciate it.
All right, Luke. So why don't we start with the red wave that, things are different now. I was saying for traders, it's much more difficult to have conviction. That's another department that's been shut down because there's a lot of whippy action. What is your impression? Has your narrative shifted at all with the red wave coming in from what it was?
Not really. I mean, the last couple months, really since Trump got elected, for me, it's been about two discrete time horizons, which was sort of the ensuing the first 2 to 3 months of the year, or post, probably more apropos post inauguration, first 2 to 3 months, and then what came after. And to your point, first 2 to 3 months, I have very little conviction or visibility. It is so politicized. And the only thing we've really been harping on, I would say, is this order of operations. Essentially, anything that makes the dollar stronger is going to risk triggering this 3Q23, 3Q22 in trading regime of dollar up, gold up, everything else down. And
Yeah,
so
wrecking ball. Yeah.
the wrecking ball.
All
And
right.
so it really is, the first 2 to 3 months, the lack of visibility is around. I just don't know what they're going to do. Now, beyond 3 months, to me, it is crystal clear they're going to take steps to make sure the dollar is weaker. I don't think a ton weaker, but weaker. And I think we then get into a potential Goldilocks scenario if done right, where you weaken the dollar meaningfully. Perhaps they use
Right.
gold to help reduce the debt load. You do some Doge, you do some reshoring investment, and you could end up with, I think, a world later this year that shouldn't be able to exist, and according to a lot of the correlations we've all come up under, which is to say, I think there's a world where in 6 to 9 months we could have $3,500 gold, we could have 4 to 4.5% 10-year Treasury, we could have $70 oil, we could have DXY at 102, 104. And I think you probably have NASDAQ actually slightly lower. And I think you have the industrials significantly higher. And that's actually a really good world. That's a really good world for
Yeah.
investing. But it's a world that I don't think a lot of people, historically, that list couldn't exist together. But I think that's where we end up in some way, shape, or form.
Okay. So the dollar's been giving signals of topping, and you know, your levels are real good. I think that you're starting to chart everything now, Luke. Because you're coming up with levels like 104.5, which is, you know, a level that I could see. I actually think they're going to be so successful that they'll take it under par by late summer.
That could be.
That'd be a hell of a tailwind for everything, isn't it?
Oh, absolutely. You get the dollar down like that, you're going to get equities up big, you're going to get gold up big, you're going to get Bitcoin
Yeah.
up big, going to get paradoxically, you're going to get 10-year yields probably back to 4. The correlation between the dollar and 10-year yields has been so strong for the last couple of years. The dollar, and that's simply a function of the combination of foreign borrowing in dollars, which is enormous, $13 trillion, and foreign ownership of dollar assets, which is also enormous, even more enormous, $22 trillion net. So every time the dollar gets too strong, you know, yes, it's a wrecking ball, but the wrecking ball, you know, foreigners have a gigantic $22 trillion piggy bank of US dollar assets, including treasuries that they will sell to raise dollars. And that's why this correlation has gotten so tight between the dollar and the 10-year. And so, yeah, if you get the dollar down towards 100 later this summer,
Yeah.
that's risk on.
7,000 S&Ps.
I think that's right. I think that's right.
All right. So I wanted to address the bond market, and you're talking about the 10-year maybe getting down to 4. When I look at TLT here, they look in trouble. They look like they're in trouble. So before we get to your destination of 4% yields, and I think that there's more pain to come. And this 85 level in TLT, Luke, look how important it is. You know, if you look left, and so people are calling it. I know I didn't look at your stream, but I bet when people were calling this a head and shoulders bottom that was coming out, you didn't believe it. But under 85 is a big deal. Look at 85 all the way
Oh
to
yeah,
the
there's
left.
not a lot of support under there, is there?
Right. So I mean, if we take out 85, we're going to new lows in TLT.
Yeah,
That's the way it looks.
and to me, I think when I hear Besant say last week, Trump and I are
Yeah.
watching the 10-year. To me, I think that is the sign that that this chart will hold, the
Okay.
TLT will hold, and what will give will be your dollar chart. In other words, they
Okay.
will. If they can get dollar down, this chart will hold. If the dollar goes back to 109, 110, look out below on TLT. And then they're into real trouble because at least from what I'm hearing from traders, is you get the 10-year up near 5 and people will shoot first and ask questions later in terms of risk. They are going to, you know, they'll sell everything except the dollar at 495 on the 10-year. And so I think that's the line in the sand, if I had to guess, that Besant wants to avoid at all costs. And we started to see signs of that, right? When we
Yeah.
see Besant come out, you know, last week's QRA, he was pretty critical in the preceding 2 years that Yellen had not termed out the debt. And then he gets in the seat and he doesn't term out the debt. And I think he ultimately got sat down and read in and as to the true state of demand at the long end of the Treasury curve. And I think it's terrible. I don't think it's much of a market. The Fed has not sold a 10+ year Treasury on net since 2010. So ultimately, I think that 10-year or that, excuse me, that TLT, and I know TLT is a little different than 10-year, but I ultimately
Yeah.
think that the 10-year won't be allowed to go much over 4.8, 4.9, maybe 5 at the worst case, and that the release valve will be the dollar. And if they can keep the dollar down by any number of means, then I think that TLT chart will hold.
Okay. I do see the potential for us taking out this high we had in October, which was a low in the bond market too. So we'll see what happens there. We've lost a little mo in Bitcoin over the last few months. Kind of reminds me of the S&Ps, just sideways action. Bulls will call it consolidation, bears will call it distribution. So what do you think it is? S&Ps is it? I mean, really, you look at the S&Ps; they've been moving sideways since December, maybe even November. So the melt up hasn't been in the U.S. the melt up has been in Europe. The DAX is making new highs. China's come back big time. So that's kind of confirming that the markets believe the dollar has topped, and that maybe if there is a correction, the leaders are going to be offshore, not onshore.
I think
What
that's
that?
yeah, I think that's distinctly possible, particularly given the geopolitics, right? So
Yeah,
something, as you know, that caught my eye last week, for example, was that the United States essentially strong-armed Panama to leave the Chinese Belt and Road. And geopolitically, the United States seems to be taking a position of essentially a new Monroe Doctrine, which is, vis-a-vis China. We don't want China's Belt and Road in the Western Hemisphere. And as a great power, that is our right to say. I won't opine on whether it's the right thing to do or not. It might be. However, I don't think I think markets are starting to sniff it out in the way you just described, but I don't think most traders have made the connection yet about what the single biggest Chinese Belt and Road hub in the Western Hemisphere is. And it's
Europe?
the it's the Nasdaq.
Oh, okay.
For 10 years, China has been running massive surpluses against the US and then recycling those surpluses into the Qs. And so you can see it that the foreign direct investment, which is heavily China driven since 2014 into US equities, has gone from like $4 trillion to $16 trillion. So there are
Wow.
trillions and trillions of dollars of Chinese dollars, Chinese capital in the QQQs. And so if America wants China out of the Western Hemisphere, if they don't want the Belt and Road in the Western Hemisphere, you're going to get a lot of price action we should start to see that is essentially, I'm taking my ball and I'm going home. And what you just described is exactly that. Chinese money, I'm taking my ball, I'm going home.
Yeah,
Europeans, I'm taking my ball, I'm going home. And we would see DAX at highs despite awful economic statistics. We would see Chinese stocks starting to run. We'd see the dollar starting to weaken. We'd see gold start to run and gold actually outperforming S&P. So
right.
I think that's the price action we're seeing. And I don't see any reason why that won't necessarily continue. So I think I think it could be very much a similar analog to what we had, if you remember back in 99 and 2000, which was from 2000 to 2003, we had a really vicious correction at
Yeah,
the
bear
headline, but
market.
underneath it was heavily NASDAQ bubble completely coming unhinged. And US industrials and EMs and commodities actually did pretty well after sort of the
Right.
initial sell-off. And then they outperformed for another 5 years beyond that. So I think we may be in the early days of this capital move, not offshore, but then also this reshuffling within the U.S. markets away from the biggest Chinese Belt and Road hub in the world, which is the Nasdaq.
Okay, and that's interesting because the Mag 7 have done no better than they did in the movie. All right. Because
I saw a chart the other day. They've underperformed European banks over like the last year or 2 years, which was
yeah,
astonishing to me. I would have never guessed that without someone pointing it out.
yeah.
And to your point.
Yeah, I mean, you could just run down the list, and many of them are broken. Amazon doesn't look so good. Apple was the first one they took out and shot. Google they shot last week, right?
Yeah.
Microsoft is a crash, right? It could rally. It's pretty oversold. And you know what? My biggest bearish position is in NVIDIA. Am I crazy, Luke?
I don't think you're crazy. I don't have a position on it or a view on it one way or another, but the thing that grabs me is from the macro fundamentals, right? We just described that the Americans don't want Chinese capital in Western, and so that's a capital outflow. And obviously, NVIDIA's been huge,
Yeah,
beneficiary of that. But then also, I don't think, and I'm take this with a block of salt because I am not an AI
right,
expert.
right.
However, I think this DeepSeek news was almost like it has the potential to be almost like if you remember back in 2000, like April 2000, Metallica won the Napster case, right? Where they said,
Oh,
okay, you got to shut down Napster. and
Right.
nobody really knew how much volume was being done throughout all of the fiber networks on song swapping. And like as soon as that ruling came through, sort of capacity, excess capacity, it was in some circles, the Metallica Napster victory could be seen as sort of was seen as a butterfly that flapped its wings and caused the hurricane of the tech crash.
Right.
Point
Okay.
being, this DeepSeek news, right? Like let's just take a step back and appreciate what just happened, which is a month and a half ago, AI was going to be American monopolies with
Right.
monopoly profits, high moat, high capital cost. And 4 to 6 weeks later, AI is now suddenly being advocated by American interests, open source, so free, but still those same high capital costs. Like that's a 180-degree turn in the underlying business model that drives demand for a lot of chips. Will the investment still happen? Probably. Will it be a great business? Will the margins be, if the margin profile of NVIDIA's customers has changed, it's only a matter of time till the margin profile downstream starts to change. So, like, it's not like, oh, it's this quarter, that quarter, but I just think between the capital flow dynamic of NASDAQ, where
Yeah.
the Americans are making clear that we don't want Chinese money in our hemisphere, and there's trillions of it in the NASDAQ, and then this DeepSeek thing, I think, is very much a wild card in terms of the business model might have just changed very much, and it's still going to be huge. It's still going to change the way we do things, and it doesn't mean you should give something whatever it's trading at 30 times sales or say 10 times, whatever ludicrous
Yeah.
multiples. Multiples
Yeah.
need to get less ludicrous, quite possibly.
Okay. So the AI, just like everything else in the tech world, becomes commoditized.
Monetized.
Yeah. So there is no monopoly that we thought there was, and the longer we go, the more new mousetraps will be built.
I think that's right, and then the Chinese competition side of it too, I
Yeah.
think is also enormous, right? We've heard this, well, Besant's going to sit down with our trading partners and say, you want to be with us because we got all the best technology, and now they can go, well, this DeepSeek's free, and in some metrics, a lot of metrics, it's better than yours. So what else you got? And so
Yeah.
it's one of these things that has the potential to be so big. I don't think people have had the ability to really process what it could be. It's just so early, but to me,
It's a time
uncertainty.
bomb.
Yeah, uncertainty plus high multiples in my career have never been a good place to be. When you
Okay.
have really high multiples and then you have uncertainty where there previously wasn't uncertainty, that almost always eventually works out in lower multiples, if not
Okay.
lower earnings as well.
Okay. How many Trump coins did you buy a few weeks ago?
None.
Do you own a fart coin?
I do not own a fart coin.
Uh,
I
all
do think
right.
I do
Go
think
ahead.
I do think it's the most instructive thing around the Trump coin to me was
Yeah.
I have heard all for so many times, and it's very much an American insight that, well, when it's time for me to buy gold, I'll buy gold, or when it's time, right? I'll wait till it does this or that, and like Trump coin was up 12,000% in 13 hours. And granted, it was off a low base and but like I think it was instructive from the standpoint of there's a way where this can go, where like you go to bed on a Friday night, and in my opinion, gold's the one that I really pay attention to. You go to bed on a Friday night and gold's at 3,000, and you come in on Sunday night and turn on your screen, and gold's 5,000 or 6,000 or 10,000. And it's
That's
entirely
interesting.
possible that if you're on paper, you'll get cash settled Friday. Maybe you will, maybe you won't. But I think we are now into, the old, there be dragons, I
Yeah.
think we're into a world where like you don't want to go into a weekend, much beyond flat if you're a trader, because these
Good
kinds of
advice.
things I think are on the table because the fiscal situation, the debt situation is so acute.
Okay. So let's talk about that. Do you have confidence in Doge and Musk and what they're doing?
Uh,
Will it matter?
it, I have confidence. Musk has shown a repeated ability to find the soft spot in the system and then basically jump up and down on it till it breaks. Like that is, it's a superpower of his. So I have no reason to doubt that. I am have been warning very vocally that if they try to doge before they weaken the dollar, they will end up creating a severe financial crisis. Again, dollar up, everything else down, and they're going to discredit Trump and the administration basically within the first 60 days, and then they'll be basically a lame duck for all 4 years. And so I've been very vocal that you've got to follow the correct order of operations, which is you got to devalue the debt first. You can do that by weakening the dollar. You can do that by revaluing gold higher and either buying down debt or having that money deposited into the TGA, which then reduces prospective issuance and gives Bessent a whole ton of operating room.
Options.
It's effectively gold QE. And so I've been very vocal about that. I've been very encouraged in the last couple of weeks, the commentary we've seen out of Bessent, right? When he comes out last week and says, standing next to Trump, we are going to monetize the asset side of the US government balance sheet for the American people. Wow. Like,
Yeah.
I don't think he's talking about selling government buildings. I think he's talking
No,
about
they're gold.
remarking the gold to market, or maybe even beyond that, to create operating room. And so I think I think Doge is the right thing to do as long as they continue to follow that order of operations. Can they do enough? Again, it's tricky because look, if the NASDAQ goes down 20% off the highs and stays there because of what they're doing on the tariff and trade side, we can see in 2022, stocks fell 20%, US receipts fell $400 billion. So it's this multi-lever. Can Musk cut? Absolutely. Now, let's say he cuts $300 billion. That's a lot of money right off the bat. But if NASDAQ goes down 20% and stays down, which in the grand scheme of things from where it's trading is nothing,
Right. It is
in
nothing.
about 6 months, receipts are going to fall 400 billion. And so now the deficit's actually going to be 100 billion higher despite what Musk has done. And again, if they don't manage the order of operations properly, you're going to end up discrediting Musk and Trump and all of it. Because if Musk makes this whole big hub about look at everything I'm cutting, and we wake up in 6 months, NASDAQ's down 20%, and receipts are down 400 billion, and deficit's actually up, he's going to look like a fool. And like he doesn't know what he's doing. So I think ultimately, if they keep, they're going to be, I think, trying to cut with one hand, trying to keep get Chinese money out of the NASDAQ with the other while keeping it from falling too far and keeping the 10-year not too high. And I think the release valve in all of it is the dollar. At the end of the day, like there's a lot there. They're threading a needle, but to me, sort of the blunt instruments, if I'm them wanting to try to achieve all this, I'm doing two things. Every day, I'm bidding gold. Every day, I want gold up another 10 to 20 points. Every day. Maybe one day a week, I take it off, let it back off a bit just to kind of keep traders honest. Every day, though, gold's got to go up. And then similarly, I want to keep the dollar under under 109, but better, under 105, under one, and if I can do those two things, it could work. It's going to be threading the needle. It's going to be like Maverick in the movie Top Gun Maverick, threading the valley, but it's doable.
So if there's a big correction in the gold market, is that a sign or a signal that they're off course and they're causing damage? So I mean, if we saw 2,400 in gold over the next 6 months, would that mean
that goes to 2,400 and stays there like that? They're telling you hell's coming. That they've screwed up. The dollar's going high.
Okay. So I don't have the same conviction I had about the dollar before the election, but the charts are more important than ever to me, Luke, because there's so many different narratives. Price is really the only thing you could count on in this environment. Price action.
I think that's right. And something we wrote a couple weeks ago, it's the old Sherlock Holmes statement is something I'm referring to as well, which is once you eliminate the impossible, anything else, whatever remains, however improbable, must be the truth. And so then you say, okay, well, we're not going to let ourselves not be able to produce weapons because they're all made in China. Okay, so we're not going to default on the debt nominally. We're not going to, and once you sort of cutting out, once you start cutting out all the things there's no way we're going to do, what you're left with is, I think, your dollar view, which is like, okay, the release valve has to be the dollar. And then how do we get the dollar down? Well,
You
one way to
yield
do
down.
that is to keep gold bid. If
Okay.
gold just keeps going up every day, I think that at the very worst, I think that keeps a lid on the dollar, and I think it puts a gentle downward pressure on the dollar. If you just come in every day as a trader, like, God, gold's up another 10, 20 points, up another 10, 20 points, up another 10,
Yeah.
and that gives you that leeway. And oh, by the way, it doesn't exactly hurt the US if we wake up and gold's at 4,000 in November, because now if we still haven't revalued the gold, now it's $1.2 trillion, $1.3 trillion that goes into the TGA. And now you don't need
Right.
to issue any duration for the next 12 months, 18 months. And that's basically gold QE into the midterms.
Okay. Wow. I feel caught up. I really appreciate your edifying our community every time you're here, Luke. I learn from you, and I recommend. Luke has his own YouTube channel too, does his own stuff, but as you know, he's interviewed everywhere. And look, you heard it. I don't have to say anything about it. Um, I guess conviction is not gone because you have it, Luke. And you brought it to the table, and now I have some things to monitor that I didn't 30 minutes ago. Thank you.
Oh, excellent. I'm happy to hear that. So thanks for having me
Yeah,
on. It's great being here again.
yeah, Luke, great to see you, buddy. Let's have a great decade this year.
That sounds awesome.
Luke Roman, follow him on X at Luke Roman. Go to the Forest for the Trees. You could at least subscribe here and start looking at his free stuff. But I think you're going to need Luke in 2025. And you know what? You could have used him the last couple years and been long Bitcoin and gold, which he's been pounding the table on since I've known him. And that's a wrap. I really, Luke Roman, one of the best out there, and hope everyone enjoyed it. Thank you very much, Luke.
Thank you.
Appreciate
Have a great day, everyone.
yeah, great talking with you and batting the ball around. So remember, everyone, don't just count your pips, count your blessings, and don't just count your goals and everything else. Hope everyone enjoyed Luke Roman. Okay. And all right. So you too, Ingmar. Everyone have a great day. We'll wrap it up tomorrow. It already feels like Friday to me. And see everyone tomorrow. TGIF tomorrow. Take care, everyone. Adios.